Hi, I'm Errol Wards, Associate Broker with Landmark Realty here in Hays, Kansas. And today's topic is going to be foreclosure versus short sale. What's the difference between the two? I'll be back in a moment to tell you the difference. To many people, owning a home is a dream come true. And it takes savings and it takes time to get into a home. And once you're in a home, it takes some time to take care of it, to pay off the mortgage, to take care of maintenance on the property. There's times when you might get in a problem, and paying off the mortgage may be a problem, which could affect your credit score. And what would happen? You could lose a job. You may have some medical expenses that far exceed what your income is bringing in, and you get behind in the payments of your home. And you'll have two options. One is a short sale, and the other is a foreclosure. A short sale is a voluntary process to sell your home for less than what is owed against the home, while a foreclosure is an involuntary process to sell your home. Which is best for you? They both affect your credit score. The short sale is quite lengthy. And it depends on the cooperation of the lender. A short sale is, say you owe $200,000 on a home, and you're able to sell it for $175,000, and the bank's willing to, or the lender is willing to accept that $175,000. There's a deficiency of $25,000, which you would be responsible for. Sometimes they won't make you responsible for that, but they could send you a 1099, which means that you were credited with $25,000, and you'd pay some income tax on that. But the short sale does take some time, and what it entails is that you must get approval from the lender to be able to sell your home for less than what's owed against it. And there's a process that could take anywhere from 6 months to maybe a year. There's quite a bit of documentation that takes place. You'd have to write a letter to the lender explaining the process of why you cannot pay off your mortgage. And again, that could be because, well, I've lost my job and I can't find another one, or we've had some unexpected medical expenses that are just taking more of our income than we can put towards the mortgage. So those are things that you start out with, and eventually, after some time of documentation and back and forth between you and the lender, you'll find that they'll let you sell the home, and then you will be out of the debt. But how does that affect your credit score? Well, in my research in talking to a lender, and also some other research and some documentation, is that there are two fields of thought on this. One is that it does affect your credit rating to a point that you may be from 800 score of credit rating down to maybe 650. The other is that you might be able to, the other opinion that I've been able to get is that after a short sale, you can go and buy another home, if that works into the process. So those are the things that would happen with a short sale, but it does affect your credit rating. Now, a foreclosure, on the other hand, is probably the worst thing you could do. That really wrecks your credit rating. A foreclosure is when the lender will take the home away from you involuntarily. If you're staying in the home and you don't wish to leave, then they will get you evicted. And they will then put the house on the market and try to get what they can as quickly as possible from a foreclosed sale. And how does that affect your credit rating? Well, it affects your credit rating in this way. Your credit rating will be lowered for 7 years. In other words, you won't be able to buy another home. You will not be able to get a mortgage for 7 years. That's when you go into foreclosure. It's like filing a bankruptcy, I guess. And so those are the differences. One is that you'll have a credit rating that is to the point that you can't buy another home, or you can have the short sale where you can possibly save your credit rating to a certain extent and be able to go ahead and purchase another property. These are things that maybe you need to get further information on. Check with an attorney, check with maybe your accountant, and see exactly what the laws say. Each state has different laws on how they handle short sales and how they handle foreclosures. Again, a short sale is a voluntary process in which you sell your home for less than what's owed against it, and you may be required to pay the deficit over some time. It may be something you'd work out with the lender. A foreclosure is an involuntary process that actually just takes the home away from you. If this information has been helpful to you, please check the like button below. And if you'd like to leave a comment, please do so. We'd certainly appreciate it if you'd take a look and subscribe to our channel. And we'll have more information about real estate that would be of interest to you next week. Hope that you'll join us then.